From a valuation of $47 billion to filing for bankruptcy after a nightmare of an IPO, WeWork was once among the most valuable startups on Earth. Its ambitious founder saw himself as a visionary, a messiah destined to change the world. But today, WeWork is bankrupt, drowning in lawsuits, and accused of being a cult. So, what really went wrong? This is a tale of obscene wealth, unchecked power, and a fallen unicorn. As we peel back the layers, the madness only escalates. Welcome to another episode of Before and After. Today I cover the rise and catastrophic collapse of WeWork, one of the wildest business stories ever told.
Net losses, they were in the billions of dollars.
Company went from a $47 billion valuation to near bankruptcy.
How fast are you growing?
Very.
When Adam was growing up, his family moved around frequently, and he lived in over a dozen different places. His nomadic childhood left him craving success. In 2001, at 22, he moved to New York to get rich. His first idea? Shoes with collapsible heels. But they were ugly and dangerous. His next? Baby clothes with knee pads, inspired by a joke. Adam sold some, but babies didn't need knee pads. He needed to think bigger, and that's when his ambition truly took off. Adam Neumann met Miguel McKelvey in an elevator conversation, a bold extrovert meeting a quiet introvert. Inspired by a simple idea, renting out shared office space, they convinced Adam's landlord, Joshua Gutman, to let them transform empty floors into co-working spaces. Their company, Green Desk, was born in 2008, offering startups short-term, flexible office rentals with shared amenities. The timing was perfect, as the financial crisis had left many looking for affordable workspaces. Adam wanted global expansion, while Gutman preferred a cautious approach. In 2009, Adam and Miguel sold their stake for $500,000 each, walking away to pursue a bigger vision. They reinvested their profits into a new venture, WeWork. Adam dreamed big, envisioning more than just offices. They chose the name WeWork to emphasize community and allow for future expansion into We Live, We Eat, and beyond. Unlike Green Desk, WeWork leased buildings outright, taking on more risk, but also higher potential profit. Adam's persistence paid off when Joel Schreiber invested $15 million, despite WeWork having no office yet. This gave them credibility, leading to their first location in Soho. They recruited members by selling the vision of a collaborative workspace. Opened in 2010, WeWork started with 17 tenants. The company's ethos was clear: networking, transparency, and breaking free from corporate office culture. Millennials craved social, fun workplaces, and WeWork tapped into that. Even before finishing their first office, Adam pushed for expansion, hiring staff who did everything. Employees pulled all-nighters, built desks, and painted walls, often meeting impossible deadlines set by Adam.
Never give up! Work until you drop!
The office culture was intense. Leaving at 6 p.m. was called a half day, and weekends were just another workday. Yet, many employees loved the fast-paced, youthful environment. Investors were dazzled by Adam's salesmanship. He staged fake office parties to impress them. The biggest trick? Convincing investors WeWork wasn't a real estate company, a claim that would soon unravel. Adam Neumann claimed the 2000s were for iPhones, but the next decade was about community and a new way of working. He positioned WeWork as a tech company, not real estate, comparing it to Uber for offices and Airbnb for workspaces. He called it the world's first physical social network, selling investors tech-driven vision. The reality? WeWork wasn't tech at all. Unlike software, which scales easily, WeWork faced high costs for leases, maintenance, and expansion. But Adam manipulated investor hype, urging his team to inflate projections and focusing solely on revenue growth, not profitability. Despite skepticism, top VC firm Benchmark Capital invested $16.5 million, giving credibility to WeWork and sparking FOMO among other investors. Investors flocked to WeWork in a domino effect, driving valuations higher with each round. Adam prioritized rapid growth over profits, aggressively outbidding rivals for office leases. When Goldman Sachs offered funding at a $220 million valuation, he rejected it as too low. Soon after, WeWork raised $40 million at a $440 million valuation, double Goldman's offer. To maintain control, Adam changed voting rights so his shares held 10 times more power. Despite warnings, he insisted, "I am WeWork." To appear more like a tech company, WeWork launched flawed in-house software, including WeConnect, but few used it. Despite raising millions, WeWork burned cash fast. In 2013, JP Morgan and others invested $150 million, making it a $1.5 billion unicorn. Investors, fearing missing out on the next big thing, overlooked red flags, betting someone else would pay even more later. A classic case of the greater fool theory. Every summer, WeWork held lavish retreats, a festival with live music, rock climbing, yoga, and endless alcohol. Employees treated it as an opportunity to party hard, with executives often indulging. One year, the head of HR was hospitalized for excessive drinking. By 2015, the event cost millions, featuring acts like Lorde and The Weeknd. Employees camped in muddy tents, while Adam Neumann relaxed in a luxury trailer. Some saw it as cult-like, with mandatory attendance tracked by bracelets. WeWork's culture was built on partying. Weekly meetings involved tequila shots and chants of WeWork. Despite mounting losses, Adam convinced investors that growth was more important than profits. With another $355 million raised, he compared WeWork to Amazon, promising global domination. By 2014, Adam trademarked names for future ventures like We Eat and We Bike. Employees joked about a WeWork energy drink, while office essentials were neglected. As investor money poured in, Adam pursued wild ideas, including We Studios, to promote his wife's acting career. WeWork expanded into boutique gyms, custom fragrances, and even hired a spiritual advisor. Adam envisioned a We World and even dreamed of WeWork on Mars. Meanwhile, We Live, a communal housing project, flopped. Yet Adam kept attracting investors with rooftop shots and celebrations. As costs soared, WeWork burned through cash and was losing $1 million a day by 2016. Adam needed a miracle, and then he met someone who could change everything. Masayoshi Son, SoftBank's founder, is known for bold bets. After briefly becoming the world's richest man in 2000, he lost $70 billion in the dot-com crash. Undeterred, he invested $20 million in Alibaba, turning it into $70 billion, one of the best VC deals ever. Masa invested in people, not just businesses, backing Jack Ma for his vision. In 2017, he met Adam Neumann for a rushed 12-minute WeWork pitch. Impressed, Masa drafted a $4.4 billion deal in his car, marking the Vision Fund's biggest investment. Adam signed immediately. Desperate for cash, SoftBank's $4 billion investment valued WeWork at $20 billion, making it one of the most valuable private companies. Masa became a mentor, urging Adam to think 10 times bigger. Despite doubts from SoftBank executives about WeWork's tech claims and alarming finances, Masa trusted his instincts. In 2017, WeWork became the fourth most valuable US startup. Adam sold $361 million in stock, and Masa's Mr. 10x philosophy pushed Adam to think even more audaciously. Many believe this moment shaped WeWork's future. With billions from Masa and a directive to think bigger and act crazier, Adam abandoned restraint. His first move crushed the competition. After inviting the CEO of Industrious onto a private jet and being rejected, Adam threatened to poach tenants by offering years of free rent. WeWork aggressively targeted rivals, even sending undercover employees or hiring a steel drum band to disrupt competitors' offices. Lawsuits followed, including actions against small firms like Your Work and We Labs for name infringement. Meanwhile, WeWork's marketing budget tripled and expansion surged. Masa's ambition grew, aiming for 5 million members instead of 1, leading to unsustainable growth. Revenue projections became unrealistic and lease overpayments became routine. WeWork's early careful spending was gone, and by 2017, instead of a $500 million profit, it lost nearly $1 billion. Despite doubts, Adam remained in control, claiming growth mattered more. However, an internal study showed 69% of members had no friends outside work, calling WeWork's community into question. Adam pushed a new space-as-a-service model, hoping to rival tech giants. He continued acquiring companies like Meetup.com, believing nothing could go wrong. Adam announced WeWork's expansion into Africa to help and joked about becoming president of the world. His ego grew with the company's valuation. He invested in ventures like medical marijuana and coffee creamers, while employees crammed into smaller spaces. He rebranded WeWork as Space as a Service and secretly leased a building he owned to the company, collecting $12 million. Meanwhile, he bought a $63 million private jet. Then Adam suddenly banned meat, shocking even executives. At a company event, Adam claimed WeWork could solve the orphan crisis and world hunger within 2 years. His employees saw his delusions growing. WeWork employees were shocked when the company launched WeGrow, an elementary school started by Adam and Rebecca. Despite their lack of education experience, tuition reached $42,000, with a chaotic launch including unpaid security, ukulele sessions, and meditation. While Adam planned expansions into airlines, fitness, and hotels, he aimed to make WeWork the first trillion-dollar company. Adam proposed owning, building, and managing buildings to disrupt real estate, seeking $100 billion in funding. Masa supported him, valuing WeWork at $47 billion. Despite massive losses, Adam rebranded as the We Company, expanding into apartments and schools. However, financial red flags and a market downturn caused these plans to collapse. With SoftBank's funds lacking, Masa offered only $2 billion, and WeWork's future seemed uncertain. Instead of economies of scale, growth fueled reckless spending. They overpaid for leases and wasted money on unused bulk furniture. Despite Adam's occasional cost-cutting attempts, he kept budgets high to drive revenue. WeWork poured money into tech, including a costly AI project. By 2019, with 425 locations, WeWork was nearly broke. SoftBank's reduced investment scared off other VCs, leaving one option: going public. This meant exposing WeWork's shaky finances. WeWork's employees were excited when the company announced it was going public, many hoping to cash in on their stock options. Banks vied for WeWork's IPO, with Goldman Sachs pitching it as a potential $1 trillion company. However, Adam refused to define WeWork as a real estate company, making the IPO documents confusing. Despite warnings, he pressed forward, and the S1 document was filled with oddities like a dedication to the energy way greater than anyone of us. When the S1 was released, the response was immediate. WeWork's massive losses and Adam's questionable financial dealings were exposed. He had leased buildings he owned to the company and sold trademarks for millions. The company's valuation plummeted. Amid bad press, Adam's erratic behavior worsened the situation. With the IPO falling apart, SoftBank halted the process, and the dream collapsed. WeWork couldn't go public, but without it, they would run out of money. As the negative press grew, his investors urged him to step down. Reluctantly, he agreed, securing a $185 million exit deal and a $500 million loan. WeWork's valuation dropped from $47 billion to $8 billion, leaving employees with worthless stock, while Adam walked away a billionaire. After his departure, the company shifted to cost-cutting measures, but couldn't avoid financial ruin. The pandemic worsened things, and SoftBank pulled out. By 2021, WeWork merged with an SPAC to go public, but its stock price tanked. In 2023, the company filed for bankruptcy with $2.9 billion in debt. Despite WeWork's collapse, Adam Neumann launched Flow, a residential real estate startup, in 2022, backed by $350 million in VC funding. It was valued at $1 billion before even making money. Neumann claimed he had learned from his past mistakes, but despite everything, he remains wealthy and unscathed by WeWork's failure. And it almost seems like he played the game excellently. If you like this video, please consider watching one of these two videos next.